Hello, neighbors, and welcome back to the neighborhood. I am Squealer D, and I am back again. And this time, my friends, I am going to teach you, actually, I'm not going to teach you, I'm going to read to you an article called How to Become Your Own Stock Analyst. That's right, how to become your own stock analyst. I almost said it wrong the first time because reading and talking aloud is not always easy, my friends. So, we are on a journey to learn to trade in the stock market, and Investopedia has this article. So I thought, why not read this article by Manoj Singh? I don't know if I said his name right, but he is an author of Bulls, Bears, and the Tortoise. Oh, I want to read Bulls, Bears, and the Tortoise. What's Bulls, Bears, and the Tortoise? Book. Bulls, Bears, and Tortoise. I'm guessing that it can't be a bad book. Oh, look, Sing Manoj. Aw. Oh, it is. Look, it's about trading. Understanding the basic equations of financial markets. I thought it was a kid's book. It's not. It's not a kid's book. He should draw a kid's book so that kids could start understanding. Oh, it's only got 2 stars. What happened? Why it only got 2 stars? Where's the reviews? Uh-oh. Looks like the electronic edition of the book is corrupted. There's some problem with the printing and Kindle edition. Sentences get mixed up halfway that one can't make sense of anything. I tried to re-download on 2 of my Kindle devices. Same problem. Looks like the electronic edition of book is corrupted. Amazon, please look into the bug if possible. Until then, for others, avoid buying this. Oh no. In the ebook, sentences and words are missing. Hence, it's very difficult to understand the meaning through ebook on Kindle. Otherwise, concepts are nicely explained. Oh no. Did he fix it? That was in 2016. There's no update. Oh, no. Oh, he needs to update this. He's a central banker with a mission to demystify the fear of unknown surrounding money. I like that. I want to demystify the unknown around money. That's great. He's got a book. Let's look inside. Oh, there's only 2 images. The simplest approach, we can make it bigger, to understand how money works in our life is to draw a straight line between our income and expenses. But even a straight line is made of millions of connected dots. The world of money has become so much interconnected that even a single missing link can leave a big void. This book tries to connect those dots with the 500 most basic concepts that help us in understanding the gaps between our knowledge and understanding. From understanding simple risk to what is known as risk arbitrage, one can appreciate the true dangers without understanding risk-return trade-off. Bulls and bears, who are well-versed with the workings of the invisible hand of the market, are free to follow their instincts, but the tortoise, small investors, take a decision only after connecting the dots. Take a decision only after connecting the dots. Maybe it's a language barrier. Maybe these people, maybe it isn't broken. Maybe it's a language barrier. I don't know. But that's sad. I wish they would have fixed it. So, we're reading it by Manoj, and he wrote a book. And Yarlette fact-checked it. There's Yarlette. And it was reviewed by Eric, but there's no picture of Eric. So, how to become your own stock analyst. Nobody asked you to become your own doctor or your own lawyer. So why should anybody ask you to become your own stock analyst? Some people like to take up cooking simply because they enjoy doing it. Similarly, there are people like Warren Buffett who enjoy the process of making investments. Therefore, if you are an investor who likes to be self-reliant, then you should consider becoming your own stock analyst. With a big question mark hanging over some analysts about their credibility, it's always better to learn the ropes yourself. Read on to find out how you too can think like an analyst, even while sitting at home. The key takeaways of this article are Wall Street often relies on analysts' estimates based on corporate financial data to recommend stocks and determine their target prices. Individual investors, too, can utilize the same type of fundamental analysis to identify potential undervalued stocks and set price targets. Here we go over some of the basics for researching stocks and starting to conduct your own analysis. So let's get a drink first, guys. You know, I got the coffee here, a shot of espresso, some milk. It's tasty. You guys got to get an espresso machine if you like coffee. It's like a new toy that pops out coffee. It's wonderful. I don't think I got my milk hot enough today. The cup was making my hand hot because I don't have a milk frother thing. So I got to do it old school, but that's okay. We can do it old school just like you could be your own stock analyst. So stock analysis is a process. It doesn't matter whether you're an investor looking for growth or value. The first step in thinking like an analyst is to develop a probing mind. You need to find out what to buy or sell at what price. Analysts usually focus on one particular industry or sector. Hold on 1 second. Open up my chat. I forgot about chat, guys. But I got you. If you want to chat, chat is up. So, analysts usually focus on one particular industry or sector. Within that particular sector, they focus on select companies. An analyst's aim is to deeply probe the affairs of the companies on their list. They do this by analyzing the financial statements and all other available information about the company. And we already have a video on financial statements. If you go to the playlist called Stock Market Learning, you will see that and you can watch that next. To cross-check the facts, analysts also probe the affairs of a company's suppliers, customers, and competitors. Some analysts also visit the company and interact with its management in order to gain a first-hand understanding of the workings of the company. Gradually, professional analysts connect all the dots to get the full picture. Before making any investment, you should do your own research. It's always better to research several stocks in the same industry so you have a comparative analysis. Access to information isn't usually an issue. The biggest constraint in becoming your own stock analyst is time. Retail investors who have had many other things to do may not be able to devote as much time as professional security analysis. Analysts, same dang word, but I keep saying it wrong. Sorry, guys. However, you could surely take up just one or two firms in the beginning to test how well you can analyze them. And that would help you in understanding the process. With more experience and time, you could think of putting more stocks under your lens. Best to start where you are. Looking over analyst reports is the best way to start your own analysis. That way, you save a lot of time by cutting short preliminary work. You don't have to blindly follow, sell, or buy recommendations that analysts make, but you can read their research reports to get a quick overview of the company, including its strengths and weaknesses, main competitors, industry outlook, and future prospects. Analysts simultaneously would help. Analyst reports are loaded with information, and reading reports by different analysts simultaneously would help you in identifying the common thread. Opinions may differ, but basic facts in all reports are common. Furthermore, you could take a closer look at the earnings forecasts of different analysts, which ultimately determine their buy-sell recommendations. Different analysts may set different target prices for the same stock. Always look for the reasons while reading analyst reports. What would have been your opinion about the present stock given the same information? No clue? Then move on to the next step. What to analyze? To arrive at your own reliable conclusion about a stock, you need to understand the various steps involved in stock analysis. Some analysts follow a top-down strategy, starting with an industry and then locating a winning company, while others follow a bottom-up approach, starting with a particular company and then learning about the outlook of the industry. You can make your own order, but the entire process must flow smoothly. Any process of analyzing a stock would involve the following steps. We're going to get to the steps, guys. We're going to be step masters. Are you ready? Industry analysis. There are publicly available sources of information for almost any industry. Often, the annual report of a company itself gives a good enough overview of the industry, along with its future growth outlook. Annual reports also tell us about the major and minor competitors in a particular industry. Simultaneously reading the annual reports of 2 or 3 companies should give a clearer picture. You can also subscribe to trade magazines and websites that cater to a particular industry for monitoring the latest happenings. And if you bop on over where I always tell you guys to go, Investopedia Simulator, guys, this is a trading game, and it lets you practice your trading with paper. So this is a paper account. It's not real money. There's $100,000 in it, and you can trade stocks on it. The most important thing of why I'm pointing this out right now and why you should get an account here at Investopedia Simulator is because it has a Learn tab, guys. If you click the Learn tab, look at all these things you can learn. Most of these we've went over. What is an option? We've done that. Investing, we've done that. We have done almost all of these beginning ones. Introduction to stocks. We're going to done a lot of the stock trading basics, but they are there. And then if you go to research, guys, this is the other big reason you get this account. If you go to research, they tell you to look up the annual reports and other information. If you go on here and you look it up, like let's look up Apple Inc. So Apple is here, and this is all of its information, guys. You can click more info, and it has its chart, its company profile. See, there's a company profile. All of its fundamental data, including its market cap, average volume, all of its highs and lows, what dividends it pays, margins, and its income statements. Now, the annual report is not here, but I'll bet you could easily get Apple annual report. Investor relations, Apple. So they have an investor relations right here. Look, guys. What did they make? This Apple Vision Pro, Apple's first spatial computer. You guys know how much this thing costs? They just came out with it. This thing costs $3,500. That's it. That's what it looks like. So big. Look at how it pushes on her cheeks. My cheeks would turn red and raw. It's really big on the back of your head, too. My head would sweat like crazy. I don't know. You just see yourself sitting in a room with this big thing on your head watching a movie. I couldn't do it. Maybe play a game for a little bit. But 2 hours wearing this thing would probably... Oh, look at this. You could watch videos on it. It's just sitting, watching. It's so weird. That was photos. Hey, when they see you, do they see you with this thing on your face, or can you put a picture? That's funny. This is funny. Imagine everybody just standing up here talking, looking like that. Explore the cosmos. That's pretty cool. Stargazing. I would only use it for that. I think that that's really what I would use it for, like little games like this. I couldn't see myself doing this. I could not see myself standing in a crowded where these people are watching me talking to them with this big thing on my head. And not because I would be embarrassed. It's because I would feel like I can't make a good eye contact. That's what I would feel like. It does look comfortable, though. It doesn't look comfortable, but these look more comfortable than hard plastic. Let me say that. I thought this was plastic, but it looks to be some type of running material. This looks like a running shoe, right? Where's the price? I think it's $3,500. Andrea Schubert. I don't know. It doesn't have a price. They cost so much, they don't even want to tell you how much it costs. Okay, but that's not what we came here to look at. We came here to look at their financial data, guys. Financial statements. See this? Here's quarter 2, quarter 1. You can go all the way back to 2019. And this is helpful, guys, because you can go back and look at their financial statements. Here's their annual reports right here and additional reports here. So this information is very easy to get. We just typed it in. We typed in Apple financial data, right? And this is their page. This is actually their investor page on Apple. So you know that it's going to be correct. If they fake this information, guys, they can actually go to jail. It's against the law for them with the SEC and the different programs that they have in place so that companies can't do that. They cannot pretend. They can mislead us for a couple quarters, guys. But when they release their annual reports, they can't fake that. And if they do, like I said, that's a criminal charge. So they even have dividend history, historical dividends, how much was paid. 23 cents, 20 cents, 77. They used to give higher dividends, huh? $3, 12 cents. I guess it just changes, huh? Like they must have been doing really good in 2013. They gave $3, or is it because they were new? They weren't new. When they came, it was 87. And they didn't. Wow. Apple's been around since 1987. Imagine if you invested in Apple in 1987. That would be great. So now we know how to find the history, guys. So that's what they were talking about. The company's information should be easily found. Business model analysis. You should focus on a company's strengths and weaknesses. There can be a strong company in a weak industry and a weak company in a strong industry. The strengths of a company are often reflected in things such as its unique brand identity, products, customers, and suppliers. You can learn about a company's business model from its annual report, trade magazines, and websites. And that's the same where we just were, guys. That is over there and available. Financial strength. Whether you like it or not, understanding the financial strength of a company is the most crucial step in analyzing a stock. Without understanding financials, you cannot actually think like an analyst. You should be able to understand a company's balance sheet, income statement, and cash flow statements. And like I told you guys, we have a video on that, and we are going to be doing more coming in the next week, not this week, guys. We will probably go through some business balance sheets, income statements, and cash flow statements to practice this. So if you would like some practice next week, we will do some of that live. Often numbers lying in the financial statements speak louder than the glossy words of an annual report. If you're not comfortable with numbers and you want to analyze stock, there's no time like the present to begin learning and getting comfortable with them. You guys, you have to get comfortable with numbers. I understand that math may not be your strong point, but reading numbers and understanding numbers is different than math, okay? And I know you can do it. So what you do is you tell yourself in your brain you can do it, and then you practice doing it. And guess what you'll be doing before you know it? Whatever you think it is that you can't do. So management quality. Management quality is also a critical factor for a stock analyst. It's often said that there are no good or bad companies, only good or bad managers. Key executives are responsible for the future of the company. You can assess company management and board quality. I was like, board? By doing some research on the internet. There's a plethora of information out there about every public company. Growth analysis. Stock prices follow earnings. So in order to know whether a stock price will be moving up or down in the future, you need to know where the future earnings are headed. Unfortunately, there is no quick formula that can tell you what to expect for future earnings. Analysts make their own estimates by analyzing past figures of sales growth and profit margins, along with profitability trends in that particular industry. It's basically connecting what has happened in the past to what's expected to happen in the future. Making accurate enough earnings forecasts is the ultimate test of your stock analysis capabilities because it's a good indication of how well you understood those industries and companies. So, valuations. Once you understand future earnings, the next step is to know about the worth of a company. What should be the worth of your company's stock? Analysts need to find out how much the current market price of the stock is justified in comparison to the company's value. There is no correct value, and different analysts use different parameters. Value investors look at intrinsic worth, whereas growth investors look at earning potential. A company selling at a higher PE ratio must grow at a higher price to justify its current price for growth investors. Target price. The final step is to set up a target price. Once you understand the different ways to predict future earnings, you can calculate a high and a low target price by multiplying estimated earnings per share with the estimated high and low PE ratio. And guys, I know that sounds like a lot of math, but like I said, we'll go over it a couple times. You will get it. It's not that difficult. The high and low target price is the price band within which the future stock price is likely to move in response to the expected future earnings. Once you know the target price, you can very well use it to reach your destination. What does stock analysts do? Wall Street stock analysts look deep at a company's financial reports and announcements to conduct fundamental analysis. This is done to come up with a presumed fair value or price target, and then to issue a recommendation to investors accordingly, buy or hold recommendations. What are some bottom-up tools for stock analysis? Bottom-up analysis begins with a company's financial statements, such as the balance sheet and income statement. From there, various ratios can be computed that reveal a firm's current and expected financial position. These ratios include, among several others, the debt-to-equity ratio, the quick ratio, the inventory turnover, and various price multiples. What should I do if a stock rises above its target price? If you're confident your original analysis, a security should be sold for a profit once it reaches or exceeds its target price. You may want to first see if anything fundamental has changed that might raise the current price target. But otherwise, use the proceeds from your sell to fund a new investment opportunity. The bottom line. The ultimate goal of every investor is to make a profit. However, not every investor or analyst is good at it. Never blindly accept what stock analysts have to say, and always do your own research. Not everybody can be an investing expert, but you can always improve your analytical skills when it comes to stocks. Bam. Manoj told us. I want to read his book now, but I don't want to buy it on Amazon because it's broken. So if I ever see the turtle, what is it called? Bulls, Bears, and Tortoises. If I ever see it in a store, I'm going to buy it by Manoj Singh. I'll give him a read. Anyway, guys, that was it for the article, How to Become Your Own Stock Analyst. I said it right that time. We're going to check out the news and call it a short day today. We had a pretty long one yesterday. It's nice to have a little break. So, stocks drift lower. Oil builds losses. Coinbase stock plunges after SEC suit. Well, okay. Anything good? Pause that. Shopify stock rises. Hotel X sees strong demand for July 4th travel. Let me know in the comments if you're traveling on July 4th. They said that the Memorial Day travel was more than 2019 before the pandemic. You guys are out there traveling it up with these raised ticket prices. Let me know in the comments why they raised the ticket prices and now everybody wants to go. Why didn't you go when the ticket prices were low? I don't understand. The ticket prices rise and everybody wants to go, but the ticket prices fall and nobody wants to go. I don't get that. Let me know if you are going for 4th of July or if you went somewhere for Memorial Day. How was the planes? Are they back on track? Are they still having delays? That's why I don't want to travel. It's bad enough to sit in an airplane for a couple hours, but then to sit at an airport for like 10 hours because your flight was delayed, I'm good with that. There it is. There's the $3,500 price vision. So they have the price, but on Apple, it didn't have the price. Apple be sneaky. They didn't want to put their... A new CEO says employees can't work remotely after all, and they revolt. After Farmers Group told staff last year they would be remote, some sold cars or moved to new cities. Now, the insurer's new leader says they must come to the office. What do you do if you sold your car and moved? After Farmers Group told staff last year they would be remote, some sold cars or moved to new cities. Now, the insurer's new leader says they have to go back to work. Womp, womp, womp. He looks like somebody that would want you to drive to work rather than stay home. Well, guys, now I remember why he says you have to go to work. So, this is why you have to go to work. I'm gonna type it for you right now. Corporate real estate. This is why, guys. Corporate real estate issues 2023, guys. JP Morgan. Let's see. CNN. 20 trillion commercial real estate industry, guys. So make sure that there's nothing playing because I know that's annoying. So economists are growing concerned about the $20 trillion commercial real estate industry. After decades of thriving growth bolstered by low interest rates and easy credit, commercial real estate has hit a wall. Office and retail property valuations have been falling since the pandemic brought about lower occupancy rates and changes in where people work and how they shop. There you go, guys. That's why you have to return to the office. Office and retail property valuations have been falling since the pandemic brought about lower occupancy rates and changes in where people work and how they shop. And because of that, because it's $20 trillion in their portfolios, guys, they're not going to write off $20 trillion and be like, okay, guys, well, you win, you get to work from home. No, they're going to get new CEOs. They're going to hire a new CEO. And they're going to make him tell you, get your butt back to work. Come and fill up these real estates so that we are not losing our money. It's going to happen, guys. They're going to make you go back to work so that they don't lose money in real estate. Crazy. That is crazy. It is crazy to make people that don't need to be at work go to work, open a business, pay for gas, drive a car, use all of that. You guys, do you know how much waste it is to make somebody go to work who doesn't need to go to work? We've been running off of this system since 2023 years. Perhaps they make a little less money. Perhaps they have to pay a little bit more. But their business is still running. It hasn't closed down. We can save all of those cars that those people don't drive anymore. We save them. We save all of that waste. But they would rather have you fill up these commercial businesses so that their $20 trillion commercial real estate industry doesn't fail. Because that $20 trillion is very hard to get out of your books. And a lot of them already did. A lot of them are selling off their commercial industry, their commercial real estate right now. So that's why we're going back to work, guys. I'm guessing it's the same reason we're flying too. Like, people are getting them more interested back into flying because they're losing out on money. So, oh no. Oshkosh Corp. It's an analyst report. Wisconsin-based Oshkosh Corp is an industrial manufacturer of specialty vehicles and truck bodies. Oh, I thought it was clothes. I thought it was kids' clothes, Oshkosh. That's misleading. How do they have Oshkosh clothes and an industrial manufacturer of specialty vehicles and truck bodies? Am I wrong and Oshkosh is not clothes? I thought I knew. Oh, it's Oshkosh Bagosh. I wonder if they're owned by the same people. Oshkosh truck. It has to be. And clothes. I think that's weird. They're not. We'll look at their wiki. Oshkosh Bagosh is an American children's apparel company founded in Oshkosh, Wisconsin. Oh, it's a place. How did I not know Oshkosh was a place? Because I've never been to Wisconsin. The company was founded in 1895 as the Grove Manufacturing Company. So that's why that company is also called Oshkosh, because it's a place. Look, guys, you learn something new every day. Now we know that Oshkosh is a place. That's why Oshkosh Bagosh. I always thought they made that up or as somebody's last name. That's hilarious. I bet it is somebody's last name. Where did Oshkosh come from? Where did the name come from? Not a misspelling. Named for Menominee, Chief Oshkosh. Oh, so it's like Yakima, how it's off of the Yakima Indian tribe. This is off of the... Oh, I learned something new today. Wow. Look at it. Look at this little town. Downtown Oshkosh. Oh, this little town. Not that I want to go there, but now I know. And it came from Chief Oshkosh. That makes sense now why there's this trucking company called Oshkosh and a clothing company called Oshkosh. I was like, what the heck? They have to own it. But no, they don't. So that's it, guys. We learned something new, so we can go ahead and call this a day. I will see you guys tomorrow, same time, same place. Be there or be square, neighbors. Have a great day and enjoy yourself.